All right. I am in a position long. I'm doing this video from my laptop here because when I did it from my MacBook earlier or yesterday, the sound didn't work, and I want to make sure it works here. So, um, let's see here. Show you the business here in a second. This over to the right. There we go. Screen a little brighter. Okay, so if we, I'm going to take you to the daily first. Look at, oh shoot, sorry. Okay, look at October 1st's daily candle, the wick, right here. I measured that and I took half of it, and that is that dotted line right there. Look how the bodies of these two daily candles are respecting it. Now Friday disrespected it, Monday disrespected it, Tuesday came all the way down but closed above it. Wednesday down a little bit further, closed all the way above it, and now we're selling off and we just tapped it. And if you go to a 1 minute chart, you can see right here we are, just tapped it. Look at the bodies. These are those bullish signatures that I've been telling you about. If you know what you're looking for, they scream at you. They jump off at the charts. I'm looking at this as an inversion coupled with new week opening gap from 922. I want to get back above the daily order block, okay? And there are equal highs right here. Low-hanging fruit. Once we get to this area right here, this is yesterday's regular trading hour close, I will likely partial, because I'll be honest with you, this sell-off was very aggressive today after a very aggressive sell-off yesterday, so that doesn't make me feel overly optimistic. So what I'm going to do is I am going to probably manually sell two once we get to yesterday's regular trading hour close. Okay, and I can explain that in more detail what exactly that is, but that's getting into gap theory, which I don't think he goes into in 2022. So I don't want to confuse you here, but this is where I'm at right now. Again, now we have this SIBI at sell side liquidity sweep traded up through. This should act as an inversion here. And we have it paired with new week opening gap from September 22nd. So I'm just moving this over here just to declutter my chart, but that's what I'm looking at. That's exactly what I'm looking at here. So again, we get up above this green line here is the order block, the daily order block that I showed you today. We get back above that. I want to see expansion above yesterday's regular trading hours close, and I will take 2/3. I only got in small 3 contracts. I'll take 2/3 off here, move my stop to break even, and then the last one, maybe I'll target first presented fair value gap. I don't know. We'll see. As long as I get the majority of it off and pay myself and then move my stop to break even, I can kind of play around with that last little contract, see what I want to do. But you can notice we have equal highs here too in the form of these 2 wicks. And then here, equal highs in the form of these 3 wicks. So, we'll say this is a nice little move here. I would like to see expansion right now, aggressively. And I want to see, it would be really nice if we saw this BISI remain open, meaning this candle closes up here and leaves this BISI open, because that 1 minute buy side imbalance, sell side inefficiency paired with the daily order block could provide a really nice move higher. So I want it has to start with this candle leaving this inefficiency open here. And again, the second we tap here, I'm closing two manually. You know, I'm going to do it now and just pay myself because it's been a volatile day. I'm going to change that to 1. I'm going to move this right under break even. Now look, if we trade back down into this BISI right here, I think this should be a high probability to send price higher because it's paired over top of a daily order block. All right. So you can see now we have a nice little $500 day. And, you know, I'm just going to do this. Again, we are in very, very volatile waters here. So now I'm in a risk-free trade. Okay. I've moved my stop to break even. I've taken profits. And, you know, the worst I can do is, you know, plus $300 or so, right? So, quick. I mean, I got in the trade 12:51, and by 12:58, I'm 2/3 out. So we'll let this run. Let's see what it wants to do here. All right, so I'm going to keep this open here, and I can talk over price here, and give you some narrative here because I did this yesterday for you, and my Mac Mini was not cooperating, so I moved over to my MacBook today. Yeah, I have an alert set here. I'm going to just take that off. So. It looks like we're trading down into this. I really want to see if I get the reaction out of this that I want and we move higher from here, that'll give me a lot of conviction to probably trail my stop even further. So let's zoom in here. So there you go. Okay. Got that BISI paired with the daily order block. The only thing is we have a BISI here and a BISI here, and these have been left open. So it is reasonable to see a trade down below here. So we just wicked into this one, right? Would be great if we left this open and this gets treated as a breakaway gap. That would give me you know, some bullish sentiment here to see price move higher. It doesn't have to though. It can come down and trade into here. You have to allow for that. We also have the inversion right here. So my stop right below the inversion is that's reasonable, right? All right, so we traded through this BISI, which is okay. I'm fine with that. We have this unfilled here paired with this inversion paired with new week opening gap. So let's see what we get here. But you see why I wanted to just take some profits here, because we've had a very aggressive sell-off, and who knows, right? I mean, this could just melt down and go further. You know, so you know, it's best to always just pay yourself, you know. Pay the trader is what they say. So you can see, I'm going to move this out of the way because I don't want to get too. This is an order block. Consecutive up close candles, one down close, immediately overtaken. right? Right there, order block. We trade down into it and we move higher. So that down close candle, if you extend it out in time. So if you know what I mean, right? We have consecutive up close, boom, like that. And then we have one down close. And then we immediately overtake it and we come right back down to it, trade into it, and it sends price higher. This is a buying opportunity right here. Okay. It looks like we want to trade down into New Week opening gap here. So, and the inversion. So we'll see how this reacts here. And maybe I get stopped out, and honestly, that is completely fine. I didn't have to trade today. I took a very small one and I booked profit. And if we get stopped out, we get stopped out. It's not at a loss; it's at a small gain, and I'll take a small gain any day over a loss. So, so here's the reaction at the order block again. So we'll see. I mean, if this fails, then that doesn't really scream, bullish sentiment to me. But if we move higher off this order block, I think that would be a good sign to maybe send us up into these equal highs up here. We do have this SIBI now to contend with, right? So if we're going to go higher, we have to get above it, come back and use it as an inversion. But first things first, how do we react off this order block here? We'll see. Another tap of the order block. You can see we still left these two highs in place, right? This high right here is lower than these two. So again, that's engineering liquidity. But it's good I took profits here, and that's what I mean. Just take profits early, especially when you see a huge run like that. Like we moved really aggressively, really fast. Just take something off, because the counter to that is going to be a move like this, usually, more times than not. So just take something off, pay yourself for the trouble of getting in the trade. And then if you want to trail your stop or not, that's up to you. I didn't have to trail my stop. I could keep my stop where it was. I'm not going to move it now because, again, this is a very volatile day. And, okay, there we go. So I've been stopped out. So, which is fine. I'm okay with that. And, I've realized profit on the day. And again, this could still go higher. I jammed my stop loss very quickly, right? So, that's just if it was a different day, and we didn't just have a, however many 100-point sell off, maybe I leave my stop where it was until we move higher. But again, just given the volatility in the market today, I just felt more comfortable taking profits early, trailing a stop, and leave with $374.14. Great. Okay. That's fine. But we'll see. I'm going to take this off here. We'll see. So now we're below this inversion again. So again, these, if you're very bullish, you want to see these things you want to see this inversion support price higher. You want to see this bullish order block support price higher. Now we have this breaker here. I'm not sure if you look at the reaction off that breaker. Look at that. A breaker is my favorite PD array. It's where I entered right here. And it is one of the most powerful PD arrays in the arsenal. This was my entry right here on this breaker. This candle right here, this green candle, is a bullish breaker. I don't know if ICT's taught it yet, but it is, in my opinion, it is the strongest of the PD arrays, and it's one of my favorite. I use it all the time when I trade, and it's one that I feel most comfortable with. You know, I think as you continue to learn, you know, and grow as a trader, you'll come to have your own favorite PD arrays that you like to use. Maybe they're order blocks, maybe they're fair value gaps, maybe they're inversion fair value gaps, maybe they're suspension blocks, maybe they're, you know, there are a ton of them, and you'll learn them as you progress. But for me, the breaker is by far my favorite PD array. So look, I moved my stop to in profit. If I would have kept it below, I would probably still be in this trade. But again, you know, it's not you don't want to look at it like that, because then you start getting FOMO, like, oh, should I get back in the trade? No. Made your money, stay out. You know, and we'll see what happens. But I'm gonna let this run for a minute. I do have to go back and forth between my computers. So if I'm silent for a couple of minutes, it's just because I'm at my other computer. I'll do this real quick. So here's a 5-minute chart. BISI right there. Came down, rebalanced that, moving higher. On a 15-minute chart, this is an order block, or what looks like the start of an order block. We'll see if it holds. Right? We have all of these down closed candles. The last down closed candle after we've been overtaken, change in the state of delivery, we come back down into it, we dig into the order block, and we start to move higher. Does it hold? You know, maybe it does. Time will tell. You know, but it's looking like it now. But again, we have to let, you know, another probably 15 to 30 minutes play out to see if we get an expansion off of that back into the quadrant levels. 75%, 50%, 25% in the new week opening gap. These are the daily quadrant levels. And you can see what started the sell-off today. These were the equal highs that I told you about last night that I thought were going to get tagged overnight into this morning. And sure enough, they did, and immediately melted down after taking them, right? So relative equal highs are a target, and after they're taken, it's a big meltdown here. So again, we talked about this yesterday. I was saying that this was going to get tagged overnight. It happened this morning, and we sold off. Now for the rest of the day, you know, we still do have this low here. This is Wednesday's low. That'd be yesterday. You know, and we have this low here. So are these relative equal lows? Probably. Do they need to get, you know, tagged right now? They don't need to. They could. But look where we are now. Here is the inversion. There we go. I want to make that an inversion. There we go. So notate this, right? I mean, you know, and this is the 15-minute order block right here, right? So we traded above, down into it, back into the breaker, and we're moving higher now. So, you know, listen, if I left my stop in place, I'd still be in the trade right now, right? If I didn't move my stop to above break even to cover costs, and I left it just below break even, you know, because my entry was right here at the breaker and my initial move of the stop loss was like right here, I'd still be in the trade. But again, you know, on days like today, I'm more into mitigating my risk and managing my risk appropriately versus trying to be very aggressive and let the trade run, because, you know, we saw a lot of volatility, you know, after, and look, this garbage right here was nothingness today, right? It's nasty work. And it's not until lunch that we see the sell-off, and then it really gets exaggerated down into here. And so today could be a lunchtime reversal, and we could very well end up at the high of day. Um, but again, multiple things play into my decision making, right? When it comes to managing a trade, it's Thursday. I look at the week I've had thus far. I've had a very good week. I've made a decent amount of money. I want to protect that capital. I don't want to put a lot of it at risk and risk, turning a really good week into like not as good of a week or a bad week, right? So I take that into account. So going into tomorrow, maybe I don't trade. I say that now. I'll probably see a setup, but if I do trade tomorrow, it'll be light, right? It won't be high leverage, large positions because I want to protect the capital that I've made this week. I want to protect that money. So again, back to the trade today, I am more interested on days like today in preserving capital versus trying to really push the limits because there's so much volatility in the market. There are huge swings one way to the other, right? We're going up a couple hundred points, we're selling off a couple hundred points, we're reversing right back up a few hundred more points just to sell off. Like we are in very, very volatile market conditions right now, and it's very obvious to me. So again, on a Thursday when I've made money all week, my decision to take profit early and jam my stop loss to protect those profits is more about capital preservation than trying to run up my account, right? It's always live to trade another day. And if I can continuously build up capital in my account, brick by brick, day by day, I afford myself the opportunity to do that again tomorrow and the next day and the next day. So I'm going to cut this and I'm going to put it on YouTube and I'm going to send you the link once it's done and watch it at your leisure and we can chat about it if and when you want. And look, we're going below here now. So like, again, I want to see this support price. So yeah, they're tough. They're tough markets. They're very challenging markets. It tapped against a 15-minute order block again right here, right there. So they're tough. They're challenging markets. They're not easy conditions right now. I've definitely seen them easier, and they're challenging right now. So be careful. Protect your capital. Manage your risk. All of the above. All right, I'm gonna cut this, and I'll talk to you when I talk to you.